unfortunately, we've seen a lot of projects in this industry over the last 2 years who had, token as the business model and blockchain as an end in itself. And that's obviously not what it should be.
Hello from Dubai, where I'm based as usual. Gaurav is zooming in from a new exotic location. Where are you, Gaurav?
I'm in the home to the team that beat Argentina. So I'm in Riyadh today, KSA.
Greetings from Rio.
Greetings.
And we're delighted to introduce our guest speaker for this episode. And I still can't believe it's been 42 episodes, but there we are. Our guest today, Hubertus. Hubertus, you're in Dubai as well, or are you somewhere in Europe?
Yeah, I'm actually in Dubai. Pleasure to be here. Thanks for the invite.
Hubertus, tell the audience a little bit about yourself. I was reading up on you. Obviously, Gaurav's an old friend of yours. I was reading up on you this week. You've had decades of experience, over 20 years of experience in startups, investing, scale-ups. How did you get into entrepreneurship?
Well, first of all, I come from an entrepreneurial family. So, my dad was a startup entrepreneur himself, obviously not in internet or Web3 or something, but it was more in the chemically traditional industry. And every lunch in our house was basically a board meeting. So I bred this whole air of entrepreneurship from very early on. And my first professional activities were in the regulated gaming industry in Europe, sports betting, casino gaming. I built the Western European division of a large European casino company out of Switzerland. And after that, decided to try my own luck in the entrepreneurship, the entrepreneurial arena by, moving to Dubai in 2012 and building the first mobile games company in the middle region with Arabic content. So basically, there were a lot of games back then on mobile and Facebook with basically Chinese, American, European developers, predominantly in English and Asian language. But there was nothing for the Arab world, and we we were the first ones, my partner and I. He's from Jordan, and we set this up in the Middle East. This was basically my own entrepreneurial story, so to speak, with my own kind of vested interests. And after that, obviously, we can discuss this later, but then the story went on. We sold this company in 2016. We were acquired by Stillfront, which is a large European mobile games company listed on the NASDAQ. They wanted to enter the Middle East because of its very interesting demographics and revenues and kind of statistics. So they joined and they bought us out basically. And after that, this was in 2016, I started to basically manage my own assets, and started to invest in stuff like real estate, private equity, but most of all also in venture capital, because this was what I was always excited about. And it's also the time when I met Gaurav and got in touch with the Dubai ecosystem, and we built then, a Web2, Web3 kind of venture capital activities.
You were working in Europe. I'm guessing you had a nice, comfortable life in Switzerland or Central Europe. Why you switch to the Middle East in 2012?
Yeah, back then it wasn't the same as
things were
today,
on fire
obviously.
in many parts of the Middle East back then.
Yeah, exactly. But after I left my first company, and basically we created from scratch back then the gaming industry in Western Europe, especially in Switzerland, Belgium, Malta. We did the first regulated online gaming, sports betting and casino sites. But after that, I said, listen, from the demographical point of view, where can I add value, right? So, I know the gaming industry very well. I know consumer products in that segment, and where is a demographic that might be adapt to the mobile game space, right? Which was emerging back then. It was the first, let's not forget, 2012. The mobile games were very young, so we had basically a lot of the games on Facebook back then, the social gaming applications. So mobile grew, and the Middle East has a fantastic demographics, very young population, very tech savvy. And back then, not sure if you remember those times, but the Facebook adoption and the mobile adoption in the Middle East was exponential. Why? Much more important than in other parts of the world. The RPUs in the gaming industry back then were super high. So we said, listen, let's create something for that market. All stars seem to be aligned, and let's give it a shot. This was in 2011-12.
And something similar is happening right now in the last year or two. When I look at TikTok, or before that, Twitter, the adoption both here in the UAE and in Saudi, where Gaurav is today, is off the charts. The percentage of internet users that are either TikTok or Twitter users or YouTube users, off the charts. A new emerging technology that causes quite a lot of controversy, not least in the last few months, is the whole crypto space, the blockchain space. You've been, I believe, an early backer of many projects in the blockchain space. Talk about like what's attracted you to that space, and what do you, I mean, are you sort of agnostic? You look at everything because you think the blockchain pie is going to grow over time? Or do you say, no, I like, I like layer one protocols, or I like infrastructure or dApps? Or what kind of floats your boat with it? So two questions. One is, how do you get into the blockchain space and why? And what floats your boat within that space?
Yeah. So after we sold our company to Stillfront in 2016, I first invested a lot in Web2 startups. I started to create Enabling Future, which was this venture capital arm. It had first a different name, then we renamed it to Enabling Future. I partnered up with a partner here in Dubai. And, the focus in the first place was really about projects like consumer-facing products, right? So it was the first, for instance, we invested very early on in the first retailer for organic products in the US called Thrive Market, now one of the biggest in the country. But back then, organic foods was a new trend. Everybody was getting interested in these kind of things. Then another startup was in the clean tech space, because the whole climate consciousness of the population also started to emerge. And then came obviously the whole fintech / blockchain part. And this is also kind of a trend that came up. So my whole thesis in investing back then, why we started in that in the first place, was let's follow large trends where there is a large enough captive audience. Let's get in very early and let's have a long breath in these industries until they reach maturity. And that's what we did in these three segments. And it's interesting because they are complete organic food, fintech, and climate tech. These are two totally different sectors, but this helps you also to hedge your bets. And since I'm not running a venture capital fund where I have external LPs where I need to deploy capital and have some pressure to kind of do, to create returns in a certain time frame, basically I can be more opportunistic and also hedge the bets a little bit. And how did I come into blockchain? It was basically because in the year 2016, my former lawyers, I was still having a second place in Switzerland back then, and my former lawyers in the gaming company, they all turned to become the lawyers of the Ethereum Foundation, the Cardano Foundation, the Tezos Foundation, Bancor Foundation, all these guys who set up shop in Switzerland. Right. And they showed me this deal. They said, listen, Hubertus, I heard that you're in venture now. You're interested to look into these white papers. And that's how I basically got involved in it. And also Bitcoin obviously was a separate kind of track back then already. So that's how I ended up in it. And then you start to invest. I backed some of these projects early on. And I ended up also on the board of one of the layer 2 or layer 1 projects, the largest ones back then. Tezos was the chairman for 3 years. So it was an exciting time. It gives you also the opportunity to learn a lot about the industry and to make network connections and get very deep into the rabbit hole and also help to build. And that's where we are. So that got me excited. And then at some point I met my partners here in the UAE from Ghaf Capital. So Ghaf is basically a subset of my investment activities into venture capital. It's really focused only on Web3. And I became the chairman of this fund here 2 years ago. And what we do, we really invest exclusively into token-based Web3 startups. Obviously, we can talk about the markets later on, but this is an industry, obviously, that is a little bit wild. It's a bit more unregulated. It's bubbly in a certain way. But, we backed a lot of super interesting entrepreneurs, mainly internationally. And we were the first homegrown venture capital firm in that space here in Dubai.
Nice, nice. And is there is there a specific investment thesis for Ghaf Capital? Is there or is it just the Web3 pie is going to grow over time, or are there particular?
Yeah, good question. I mean, the investment thesis obviously is to back entrepreneurs who are building the infrastructure of the next internet, right? So the whole thesis of Web3 is basically the internet of value. It's an evolution of the internet where, you know, there's a certain convergence of various technologies, like obviously Web2, but also artificial intelligence, augmented reality, crypto, all these things coming together in what is called the metaverse, right? And metaverse infrastructure is part of our investment thesis. The other verticals that we have been looking into with Ghaf Capital particularly was obviously games. So that's a little bit my background, all these play and earn games. And most of all the infrastructure, the building blocks within Web3, this can be layer 2 protocols that make the layer 1s more efficient. This can be hybrid compute platforms that allow users from the kind of Web2 space to tap into Web3 on the blockchain. So to tap into classical AWS servers, and you roll this up into the Ethereum EVM-based blockchains to make transactions faster, more efficient, all that. So the investment thesis is really about to back projects in the space that solve a problem that goes beyond pure speculation. Because unfortunately, we've seen a lot of projects in this industry over the last 2 years who had, token as the business model and blockchain as an end in itself, and that's obviously not what it should be. So we try to avoid that.
And on that point of token going up is the business model, how do you, I mean, you've been looking at the space for half a dozen years with your different hats. How do you navigate the risks, the scams, the overly entrepreneurial, let's be polite and not call them fraudsters, but just overly entrepreneurial
you
characters
can call them
in the
like
space.
that.
How do you work your way? Like, how do you stay safe and make money at the same time?
Yeah, I tell you, I think a big advantage for me is that it come out of the traditional investments arena. So I invested a lot in traditional Web2 internet technology startups before I entered Web3, and I basically applied the similar principles that every professional venture capital investor takes when he assesses a startup. So I look into the teams, I look into the use cases, and all these kind of things. But I think a very underrated aspect is timing. So it's also to understand, what is the right timing for some products. There are great ideas at the wrong moment, which are basically bad ideas, and we try to stand away from them. But mentally, it's very important in this industry, and it's more a philosophical discussion then, right? But it's very important to just avoid FOMO, to not get trapped into these typical crypto echo chambers. I think it's very easy in this industry to follow some sort of cult, which then creates biases, confirmation biases, which leads to wrong decisions. So my recipe was always trying to take a break, at least a mental break from the industry without leaving it completely, but just to talk to people who are very critical about it. Be open to talk to people who don't believe in it. Be open to, look into total different industries. And obviously the investment thesis of enabling future helps me here, because we are, again, when I talk to somebody who's involved in climate tech, and then, this recalibrates a little bit your vision of the world again. And that shapes also your radar to avoid, these kind of projects that you have just said. And apart from that, obviously, then in the whole digital asset space, it's important to, to just, do your own due diligence on people. I think people in early stage investments are the most critical part anyway, because there's not a lot of product around yet, at least in the very, very beginning. So you need to vet them. You need to do due DD on these people, on these teams. And as far as the custodianship is concerned of digital assets, I'm a big fan of cold wallets. So I don't hold the Bitcoin on exchanges at all. And in investing itself, I've never been a trader or something. So I'm a very bad trader. That's why I'm in venture capital, where I'm locked in and kind of forced to weather the storms and be patient and go for, to sacrifice short-term pleasure for long-term kind of happiness, if you want to put it like that. And so that really helps me to stay focused in this industry.
Gaurav, sacrificing short-term happiness, pleasure for long-term happiness. Is that a segue to your segment of the conversation?
It is. And thanks for bringing me in. So yeah, so I mean, when you look at this segment, right, it has to be long term, but that's a different conversation. I guess tokens can provide temporary liquidity back into the ecosystem. That might be one way of looking at it. But looking at investments, particularly in this space, right, we've seen 2 years ago the rate of investments wasn't even at a gradient, it was all in. The amount of money that was pouring into fintech as well as the Web3 space was ginormous, and on very, very, very quick rounds of funding. That's slowed down a lot generally in the ecosystem, but with particular regard to what we're seeing in Web3, what are you saying? Is it still such a groundbreaking space for so much room to grow and so much to do that the funding is continuing to perhaps be following that space, or has it also dramatically slowed down? What are you saying?
Yeah, I mean, I think Web3 investing has a very interesting approach to basically launch the company compared to Web2. So before I answer your question on the funding, I think it's important to remember that the whole concept of Web3 is basically you want to bootstrap an ecosystem from scratch, and you want to do this by giving the retail audience basically a piece of the cake, by involving them, by giving them part of the infrastructure, by allowing them to participate in the infrastructure by holding a token, basically. So that's a new way to bootstrap ecosystem that creates communities, that has a lot of advantages if you have community-driven products. Think about layer 1 protocols. For instance, Ethereum, it's super important to be decentralized because that's the whole thesis, and to have a lot of developers building on top of it. So for these kind of business models, the launch with tokens made a lot of sense. And what happened, unfortunately, afterwards, there was a lot of, with the ICO craze, then all these startups came to try to replicate the same concept, but without the same thesis underneath. So, there are tech companies where it's important to have a community right away to back it. And these companies not necessarily need VC funding at all. They can be community funded, basically. But unfortunately, what happened after that, there was a lot of abuse of this kind of system, and it became kind of a money grab for a lot of projects who basically did an ICO for ICO reasons, right? And that created a huge bubble that created completely, blown up valuations. So to answer your questions on the funding, the Web3 funds, particularly that raised funds in 2020 and they deployed them throughout 21 and now until now, they are now seeing a big problem because they have, first of all, invested into valuations that were completely overblown. If we consider current market environment where the market cap has basically gone down by 60–70%, and at the same level, also the valuations of the company have come down because many of these companies that raised in token, they don't have the runway anymore. So there is a lot of uncertainty now in the market. And to answer your question, the funding has been more than halved between comparing Q3 last year and Q3 this year in Web3. Venture capital investors are very cautious in investing, but it's a little bit regionally slightly different. So we're seeing a way more cautious aspects in the United States than in, for instance, Asia. One of the reasons might be that, especially in the US, there is this conversation about is a token, a utility token, could this be considered a security or not, right? And that's unfortunately a Damocles sword which is also still hanging there. I mean, the SEC has clearly said that Bitcoin is not a security because it's decentralized. There's no central authority. There's no corporate. There's no government board or something. Whereas with every other layer 1, and especially with all the other applications that are built on layer 1s that have issued token themselves, it's a total different conversation. And I think VCs are therefore very cautious. So funding has gone down. I heard from Silicon Valley VCs in Web3 space who advised their portfolio companies not to consider any follow-on funding for the next at least 12 to 18 months. Everybody is very cautious now because of the effects of the market crash. And let's not forget, some of the funds are also underwater because some of them have their funds in crypto, right?
So it's definitely a time of change and different views on perspective of how people are approaching this. So I guess it's very interesting to hear from you about what's actually happening there. But, even in times of trouble, where people have either, created false opportunity, or opportunities haven't materialized into what they were supposed to. There's still creation of technology companies and infrastructure in this space, which are being pursued very enthusiastically. When you're navigating this space as a person who's very involved in the Web3 community, in blockchain, how do you navigate that to a degree and pick the winners? Because just going back to what you talked about is you're building a community and you're giving the community essentially a slice of the cake or a piece of the action to be able to join in before that's actually built. So what are the fundamentals or traits you particularly look for in projects these days, especially in these times where you say, oh, this is what differentiates certain community or infrastructure builders versus others? Are you seeing any similar traits or identifiers which will allow some of our listeners or perhaps people to think twice, or perhaps double down on looking at opportunities that they might get access to?
Yeah, I think fortunately what we've seen now in Web3 with this market shakeout that is happening is refocus on core values. And it sounds almost weird to discuss this when you speak about the Web2 investor about it, but you should create a product that somebody needs, that solves a problem, that has positive margins, that has some trajectory to become profitable. Just the very easy basic math of every startup, right? But in Web3, this has not been forgotten, unfortunately, because of these bootstrapping of ecosystem and the associated tokenization model, which in principle is a good thing. But the problem is once you start to financialize these tokens and start to trade them and start to hype them, you distract the founders. I mean, I've seen founders who were more concerned with the token price than with building their product. And that's not a good thing. But this is not because they want, this is because they have to, because that's the rule of this very unregulated market, right? So in my view, Web3 has a little bit been caught up by its own thesis of being a kind of community ecosystem-driven bootstrap system. But think about it. I mean, you create a product, you have some sort of MVP, then you get some seed funding, you deliver. I mean,
these are the fundamentals.
The fundamentals. Web3 is totally different. You raise a lot of money, you promise something, and maybe you build something. It reminds me a little bit of the, in the early 2000s of the dot-com bubble. I'm not sure if you remember that time, but this was similar stuff. People basically raised funds based on prospectuses, which, by the way, back then were even issued by banks. It's even more critical than what we see now, because at least now it's completely kind of Wild West market, right? For good or for bad. But again, this to me is the biggest dilemma of this industry, that the incentive structures weren't properly aligned. And then you had venture capital firms, and I'm not making any names here, but even the very big ones in our industry.
Take names, Hubertus. Let's
look at A16Z, for instance. A fantastic Web2 investor. But what they did in Web3 primarily was, they called themselves venture capital, but it was nowhere venture, because what they did is they were the first ones who went out of the projects with their vesting schedules, which gave them the right to dump everything on the retail. And then you see all these prices going up, and after A16Z or whoever sold, they go down tremendously. And that's the wrong incentives. I think early stage investors, they should hang in there. They should stick with the founders. They should build a product like in the traditional, internet tech, consumer tech product space, like anywhere else in the world. And I think what we will see now is probably an alignment of these incentives, of these interests, to avoid similar bubbles. Because if you tokenize an innovation and an idea too early, and you allow this token to be traded on an exchange, to be backed by market makers, and to be part of a daisy chain of borrowers and lenders who stack the risk up into a bubble that leads basically to the Ponzi scheme of the last 2 years, this has nothing to do with innovation, in my view. This is just gambling, right? And this is not where this should end up. But I don't want to generalize. I mean, there are a lot of great entrepreneurs in that space. I think there are a lot of teams that build right stuff, that have the right mindset. And what we're going to see now is a simple, market washout, or you want to call it, where the bad actors or the not so, professional teams are being substituted, hopefully, by more by teams with a longer term perspective for this industry.
You heard it here, ladies and gents and developers. Back to fundamentals, back to fundamentals, back to fundamentals. But just on that note, right? We're talking about this washout that's happening. And as a washout that happens, there's collateral damage in terms of human capital, right? A lot of people losing their jobs, a lot of things that are happening. And if I don't know, I mean, all the listeners are here, and of course, all of us, I remember a time when we were talking about blockchain when it was just starting. And when we talked about blockchain, when they said, how many developers are there on this blockchain thing anyway? And I think the total at that time was something like 12,000 or 6,000 or 8,000 blockchain developers globally, right? And you look at that, the space then, and you look at the space now, right? And the circulation of talent with experience that's, 7-year vintage, 8-year vintage, 9-year vintage, or whatever maximum capacity it is for blockchain today. There's a lot of talent that seems to be circulating through. And, what are you seeing with that? Are you seeing a reappropriation of talent actually going back to businesses with fundamental basics? Do you see that sort of, is that, people moving to the UAE particularly because of what's happening with the Golden Visa project, with Dhar, with ADGM, with everything, with Binance all coming here, to this region and the UAE in particular? Are you seeing that talent being reappropriated back into good companies and fundamentals?
Yeah, I mean, it's true. There was a huge brain drain from Wall Street and from Web2 into the Web3 space over the last 2 years because of the incentive structures which were there. Honestly, one of the things that drove me into Web3 was also the incredible density of extremely intelligent people that I've seen in this industry. So it's very challenging, intellectually challenging, motivating, inspiring to work with these teams. And I think these will all prevail. These teams will prevail. They will figure it out. Let's not forget, the dot-com bubble brought similar drama, back in the early 2000s. And here we are, out of that emerged the biggest tech companies in the world. And I think in Web3, it might be similar, slightly changed maybe because, with the internet, Web3, you have the internet of value, which obviously involves money. And once there is money involved, there is regulation. So there might be a little bit a longer upside curve because you have to also cope with regulators, which is a good thing because it helps a mass adoption. So I think the flow of talent to this industry will not stop. What might stop is probably the easy funding of early stage teams, at least for a while, but this will come back because I think now it's really the time to build products, as I've said, that solve problems. And we're already seeing this, I think what we really need to have, we need consumer-facing applications that make it easy for the non-coiners, for the non-crypto natives to benefit from this sector, from this technology without even naming it blockchain. I think the moment we don't speak about blockchain anymore, we speak about a fast consumer application that solves a problem, that is faster, that is more secure, that gives additional incentives. I mean,
you look at Apple Pay today. How many
Exactly.
people know the infrastructure that goes into Apple Pay? Who knows about host card emulation? Who knows about bin ranges? Who knows about anything else that's happening on card simulation?
Totally. You shouldn't know it. You should not know it. I mean, when I'm flying a plane, I don't know how to fix an engine. That's not my problem.
Correct.
When you drive a car, you don't necessarily know how to construct the engine. So I think you should really focus on these, on growing the market. I think another thesis which we will see is, total value lock, TVL. This was the big mantra in crypto over the last 2 years. So the projects with the highest total value lock were always considered as the winners. Now everybody realized that most of this TVL was basically completely blown up out of proportion and not real demand. So I think what we will see is a shift from TVL to total users locked, right? So I think it's important to really have users, even with smaller per capita spending powers or RPUs, but to really expand the user base. And that needs, as I've said before, that needs these consumer-facing products that, and I think the Web2 people that have left Facebook or the big tech over the last couple of months, they might add a lot of value because they have been involved in consumer tech for a long time, and they can help to, the Web3 entrepreneurs to just build products that are more appealing, that are more seamless for mass adoption. And I think that's very attractive. And as far as the UAE is concerned, I think the demographics of the region that we've discussed earlier they are reflected in the decision makers of this country. I mean, it's a very young government. They understand technology. You can really see, I mean, the way how they build all the infrastructure of public services. I've never seen this in any other country to that level. And I think that's because these people come from this generation that grew up with the internet. And that will certainly help to foster policies and regulations, which is a little more risk-affine, right, to a certain extent, but which is also allowing to try out things without obviously risking the house, but giving entrepreneurs a chance to give it to basically onboard maybe kind of a sandbox solution. And we've seen it already in Web3. I mean, the last year or so, the largest entities in the world, Binance, you named yourself, but also others, they have set up shop here in Dubai.
Polygon, everyone's there,
exactly,
right? I mean,
and back in the
so
days, it was just the founder sitting here and enjoying a good life and saving taxes. But now it's different. They even bring the teams, they bring the whole developers. So I think it creates a very interesting, healthy ecosystem, very interesting network effects, and that's beneficial to the region as well.
I also think that, just from a Web3 perspective, you look at building businesses, right? If you look at the traditional fundamentals of what you require to build a business, to scale a business, to do everything, in the beginning was all resource based. You want to sell oil, you have to dig wells. You want to sell batteries, you have to have lithium. You have to do other things. You have to have these minerals, infrastructure, soil components. You have dependency factor on building things in a traditional sense, even a Web2 sense versus what you can do in a Web3 sense now. If UAE is playing home to it, you can do it from anywhere in the world, right? I think the UAE has just primed themselves to be an advocate of adoption. So I think that's where it's going to be very, very interesting to see what companies actually come out. The next unicorns is, will the UAE be home to the next Google and Web3? We don't know, but it potentially can be, because the recipe factors to actually make that happen are not the same as what it needed from a fundamental basis elsewhere.
No, you're absolutely right. And let's not forget, I mean, founders or teams, they don't go necessarily only to a place which, which provides good regulation and low taxes. You want to have a good quality of life as well. And the UAE, to me, has grown in that area of the last 10 years tremendously, right? So it's one of the highest quality of lives in the world now. So people want to stay here regardless of business or not, and that I think will probably motivate more people also to come. So I'm pretty bullish on the market here. It's probably not a quick fix, but I think the UAE is very well positioned.
Hubertus, thank you so much from my side. That's all I have today, and it's been wonderful having you. Ronit, I'm going to hand back to you, brother.
Thank you, bro.
Just to wrap all the threads of the conversation together, some people would say Web3 is just vaporware, and the sell-off we're having is we're doing the last rites of something that should never have existed. You use the .com analogy because there's a lot of capital misallocation, and there was a recovery after a few years, and there was a almighty recovery. I mean, those companies became the dominant companies globally, right? At least in the non-China world, they became dominant. They were like the era-defining companies of our generation almost. Do you think, like, from Web3, like, what are going to be like the big, if you had to pick out one or two use cases or two or three, what's going to be like the Google of Web3, like search, or the social network of Web3? Because those companies, the Googles, the Facebooks, obviously Apple as a device and software company, I mean, these companies have dominated the last 15 years. Are those companies going to carry on dominating in a hybrid Web2, Web3 world? Or are we going to see lots of these new companies emerging, or new organizations, new forms of, whether they're DAO-based or
I think
decentralized companies, distributed companies? So I guess what I'm saying is, obviously Gaurav and I, like you, have hitched our flag, if you like, to the UAE, to Dubai. So we buy everything you say about this is a great place to build Web3 businesses, or have part of your Web3 business here. But why do we need Web3 is the question I guess I get asked constantly. So I'd love to hear your this is your closing pitch. Why we need Web3?
I mean, I'm not sure if I need to really pitch it, because the point is Web3 is, it's not an end in itself. It's an underlying technology that can, improve even the value of Web2 applications going forward. And I don't think that we will see kind of consumer-facing Web3 applications like Google, but what we will see is probably some more decentralized kind of products. Like, think about the metaverse, right? This has been a buzzword over the last couple of months or years even, but in principle, when you think about what this is the convergence of different technologies, and Web3 is one of them. Crypto is one of the technologies that is part of the metaverse. But when all these technologies, AR, VR, you know, crypto, etc., they come together and you create this immersive structure where you can shop basically in a digital environment and connect these to your customers, that might be an attractive thing. But that's more infrastructure. So I think the really compelling part of Web3 is primarily in its infrastructure that creates more efficiency, more speed, more decentralization. And to me, in the whole, let's put the word Web3 on the side for a moment, to me, the killer app of crypto, honestly, is Bitcoin, right? I mean, Bitcoin is it's a long shot, but it's basically a decentralized commodity. It's a digital commodity. It's something that is scarce, that especially in this environment is attractive for the long run, and it's decentralized. It cannot be hacked, as it's not part of the FTX kind of scandal. It's not something that can be manipulated by some board, by some bad actors who just influence the code. And I think this thesis is very attractive as a kind of sound money thesis, if you think about it like that. That's the financial part of crypto. And then you have the whole technology part of crypto. And part of that is obviously the whole financial application. So I think decentralized finance, for instance, decentralized exchanges, particularly with automated market makers, that's very attractive. That can be a very interesting use case going forward that becomes mainstream. Obviously, it has to happen in a more regulated environment. I'm not saying that everything has to be fully regulated like in the traditional financial sense, but I think you need to make sure that at least the actors operating on these systems are fit and proper, because otherwise you will always be kind of open to exit scams. But the decentralized exchanges, for instance, like we've seen today with Uniswap, and others, they are now overtaking the crypto exchanges because people have realized that the money is safer when it's governed by code and by transparent order books, which you can follow on the chain. It's everything transparent. Then putting the money in a black box in a centralized exchange where nobody knows what's happening with the funds, and you don't even know if they have a proper balance sheet, as we've seen, right? So I think that might be another, if you want to call it, killer app, which is more in the financial industry. And underneath that, obviously, the whole automation of finance, which can remove certain gatekeepers to make transactions faster, smoother, and more secure. So that's two examples that I see. But most of the applications that I see in Web3, these are all, it's more on the infrastructure side. It's really to make Web2 applications maybe more performant, faster, to add the element of Internet of value to it, and to basically power up what we've already seeing now in the Web2 without replacing it. I don't think that Apple will be replaced by Web3, but this is bullshit. It's not going to happen. It shouldn't happen, right? And this is not why Web3 was created in the first place. But I think it gives this decentralized way of owning infrastructure, of being part of it, of governing it. And if this happens in a regulated way, I'm not over-regulated, but in an organized, regulated way, I think it has a long way to go, and it's very compelling in the long run.
So Web3 is going to coexist with a still particularly consumer-facing dominant Web2, and it's interesting because it creates a new, potential new infrastructure opportunity, structure.
Absolutely.
Yeah, that's a good way to put it. And I think there's a problem with the way we've labeled it, all of us, right? Because Web3 sounds like we're replacing Web2. So it's almost like we need to come up with a new label, as in the kind of coexistence rather than replacement.
But this is normal, when new generations come up. I mean, I don't have kids, but I'm a multiple uncle, so I see this all the time. Everybody tries to sell his philosophy as the next big thing, and everything else is stupid, what has been done in the past. But I think I remember the discussions back in 2017. I was on panels and people were screaming at me, ICOs will replace all of you VCs. Nobody needs you.
Yes, I remember that.
We know how this thing happens.
Yes, yes, yes,
So
yes,
you
yes,
always
yes.
need, you
VCs
need,
were going to die, banks were going
Oh
to
my
die.
God.
Yeah.
Oh,
that's
banks are
not
gonna
gonna
die was the one. Oh my God, that was the best one.
exactly. It's not gonna happen. But they are becoming more efficient. They're becoming probably more agile. They are, removing some of their structures. They're becoming probably even more open to the unbanked, because that's a big problem nowadays. I mean, more than half of the world population is unbanked. That's an issue. And that's why I think Web3 and decentralized finance can have legs which solve mass societal problems. And that's what I like about it.
Awesome. It sounds like we're opening a Pandora's box that could lead to another 1-hour conversation. So we
Episode two of.
We don't need to go into solving humanity's problems. We haven't got time for that. But thank you so much, Hubertus, for joining us today. It's been awesome to hear your thoughts, and hopefully the audience has found this interesting. What's the best way for them to stay in touch with your thoughts and your? Do they follow you on LinkedIn or Twitter? Or
yeah, I'm on LinkedIn and on Twitter, Mr. Hubertus, Mr_Hubertus. That's basically my own. I'm not super active on social media, to be honest, because I have also some off-chain activities in my portfolio. Good old traditional businesses, but yeah, that's the two main ones. So LinkedIn
awesome.
and Twitter.
Thank you so much, Hubertus, for joining us.
Thank you for having me.
Bro.
Have a good day. See you guys.